Bad date stories are always good for a laugh, and it almost feels like it's a rite of passage. But bad doctor appointments, not so much. Whether it's a doctor who rushed your appointment, belittled your symptoms, or hit you with a surprise bill, you shouldn't have to settle for mediocre care. But now, thanks to ZocDoc, you don't have to. You've got options. ZocDoc is a free app and website where you can search and compare high-quality, in-network doctors and click instantly to book an appointment. We're talking about booking in-network appointments with more than 100,000 doctors across every specialty. You can filter for doctors who take your insurance, are located nearby, and are a good fit for any medical need you have. And appointments made through ZocDoc also happen fast, typically within just 24 to 72 hours of booking. You can even score same-day appointments. Stop putting off those doctor's appointments and go to ZocDoc.com/female to find and instantly book a top-rated doctor today. That's ZocDoc.com/female. ZocDoc.com/female.
Build a routine with Ollie that supports your wellness needs, like getting your daily vitamins and minerals with Ollie's multi-gummies, or keeping your mood upbeat with all the vitamin D in Hello Happy. Give your gut health some support with probiotics, and wake up feeling refreshed after taking Ollie Sleep. Do wellness on your terms. Find Ollie at a Walmart or Target near you or at ollie.com. These statements have not been evaluated by the Food and Drug Administration. This product is not intended to diagnose, treat, cure, or prevent any disease.
Investies, I hope that you are enjoying your holidays. From myself and the Cosmic Standard team, we are wishing you all a very happy holiday season. Please enjoy this spectacular rerun that we felt needed to be re-listened to. Welcome back to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to answer a question from one of our community members. With Love from PDX asks, do you do options trading? If so, how does it work? I've seen so many posts. Let's get into it. This is a question I get very often, and I definitely want to provide you as much detail as I possibly can. I want to give you my personal experience, and then I also want to provide you with some resources at the end of this podcast episode so that if you do want to learn more about options, you can have proper and reliable resources to guide you on this journey. I'm going to give you a full definition of what options trading is, but before I get into that, I want to share with you that I did not start trading options until I was 8 years into investing, which meant that I had already grasped a lot of my emotions pertaining to the market. A lot of my fears pertaining to investing were already under control. Trading on the stock market, whether it is shares or call options, can be extremely emotional, and you can almost guarantee that people are going to lose money. So it's something that you have to take extremely serious and be emotionally prepared for. When you're trading on the stock market, it's important to respect that as a full-time career. There are professional traders that are doing this for a living. It's not necessarily something that you can easily walk away from like long-term investing. You have to be tied to your desk and watching your trade. Now, let's talk about the different types of trades that there are. There are 3 different types of methods used when trading. There's scalping, day, and swing. Now, scalping is a trade that will take place within minutes, anywhere from 5 to 10 minutes. If you do a trade within that time frame, that is considered scalping. The second method is day trading. This is a trade that takes place in the matter of one trading day. So it is a trade that will take place over the course of a few hours. And then the last method is swing trading, and this is a trade that will take longer than a day and into months. All of these trades require that you understand not just trading itself and the rules that go along with the actual trade, but it also requires that you understand stock market charts and different tools that you can utilize in order to read a stock market chart, all the way from what we call price action, which is the change in the stock price, as well as the volume of people coming on to that trade. In other words, how many people are selling in and out of that trade at any given moment. There are all of these tools that are used to read the chart more effectively and efficiently. What I want you to understand is that this is a process that is extremely intense and requires a lot of dedication in terms of educating yourself on how to trade properly and also learn what method best fits you and your emotions. And of course, as always, regulating your own personal emotions through this process. Every time I am asked about options trading or trading in general, it's a topic that I take very seriously, and I'm sure you can hear it in my voice. I just want to make sure that we understand what this process is and what we're wanting to get into, because a lot of the time, what we understand about trading is that people can make a ton of money. In the question, the second part of the question says, if so, does it work? And I'm guessing that this is pertaining to the concept of making money. Can I make money off of trading? Yes, you absolutely can. But you are most likely to lose a ton of money before you actually start making money. And so that's an investment that you have to make as you learn how to trade. You have to be emotionally prepared to lose a lot of money to get really good at trading and then eventually begin to make money. Now, there is a lot of content online that take advantage of folks getting excited about money and wanting to make quick money, that they will scam you into certain programs, and then you end up losing a lot of money, or you even end up transferring money to their accounts and losing money that way. We experienced the height of scams like that in 2020. So it's important that you are looking at resources that are reputable. Now, with all of that being said, if you want to trade and there's an allure there, I definitely want to encourage you to do so. I hope that I'm not coming off as this isn't something you can do. I just really want to convey the seriousness of it and how much money can be lost as you're learning to take on this process. As I mentioned before, I didn't start trading options until 8 years into my investing journey. This is something that is for advanced folks for the most part. It doesn't mean that everyone that starts participating in the stock market needs to have certain amount of time of being a long-term investor and then they can start trading. That is not true. There are people that come in as traders and they've never held a long-term investment ever. The way I explain trading in the course Wealth Warrior is like this. I compare it to folks that invest in real estate and flip houses versus folks that invest in real estate and hold the house as a long-term asset and generate rent from the asset. So a trader is very similar to someone that would buy the house, fix it up, and then sell it as fast as they can. That is the similar energy of a stock market trader. A stock market trader has no interest in the fundamentals of the investment. They don't care about earnings. They just care about the stock chart, how the stock chart moves, getting in and out of a trade, and making money doing so. With a long-term investment, it is similar to purchasing the house, keeping the house for the long term, and allowing for that house to appreciate in value, and perhaps collecting rent or money from Airbnb, simply acquiring revenue from that asset. That is very similar to a long-term investment. Long-term investments in the stock market, your investment is appreciating in value, and maybe you're generating dividends if your investment distributes dividends.
We're so done with new year, new you. This year, it's more you on Bumble. More of you shamelessly sending playlists, especially that one filled with show tunes. More of you finding Geminis because you know you always like them. More of you dating with intention because you know what you want. And you know what? We love that for you. Someone else will too. Be more you this year and find them on Bumble.
Oh, it's such a clutch off-season pickup, Dave.
I was worried we'd bring back the same team.
I meant those blackout motorized shades.
Blinds.com made it crazy affordable to replace our old blinds.
Hard to install?
No, it's easy. I installed these and then got some for my mom. She talked to a design consultant for free and scheduled a professional measure and install.
Hall of Fame son.
They're the #1 online retailer of custom window coverings in the world.
Blinds.com is the GOAT.
Go to Blinds.com for 40% off site-wide. Blinds.com. Rules and restrictions may apply.
So now that we are clear on what a trader is versus an actual investor, let's go ahead and discuss what options are, also known as call options. It's important for me to highlight that call options, what this question is pertaining to from With Love from PDX, is different than options that are given by an employer to exercise at a future date, which is a whole other thing that we can get into in another episode. We are speaking specifically about call options today. A call option, by definition, is a contract between a buyer and a seller to purchase a certain stock at a certain price up until a defined expiration date. Let me break that definition down for you so that we can understand, because call options can be very confusing to understand. A call option is actually a contract, and in this contract, it contains the right to purchase 100 shares. Every single contract has 100 shares of the same stock. Okay, doesn't have a multitude of different shares within that contract. The call option can be for Netflix, and that contract has 100 shares within that contract of Netflix stock. And so when you purchase a call option to trade, what you're actually purchasing is the cost of the contract. You're not purchasing 100 shares. You are just purchasing a contract between myself, who would be the buyer, and a seller who has agreed to put 100 shares in a contract. And what the seller has sold me is just the contract. Now, I can, if I wanted to, exercise the contract and buy those 100 shares off of the seller before a certain expiration date. However, for the most part, when people are trading call options, they could care less about purchasing the shares that are in the contract. What happens if the stock goes up? That contract becomes more valuable. And so let's say that I purchased a contract for $1 per share. So I purchased the contract for $100 because within that contract, there's 100 shares. And then those shares become more valuable. They go up in price. That contract is now worth, let's just say, $300. I can sell that contract to someone else for $300. So I've traded the contract and now I have gotten my $100 back and I have profited $200. And so that is how people trade call options. They are trading the contract when it goes up in value. They are not trading the shares in the contract because they don't have ownership to those shares. Only the original seller of that contract has those shares, the person that actually placed the 100 shares in the contract. So just to be very clear, when you are purchasing a call option, you are purchasing a contract. Most people that are buying and selling contracts understand that no one really wants to buy the shares in the contract. The actual intention for most traders is to purchase the contract in hopes that the contract is going to go up in value because the stock in the contract will go up in value, and then sell the contract and make a profit on the value that has increased for that contract. Here's the downside, because there is always a downside when you are trading. The downside is if those shares do not go up in value, they go down in value, the contract value also goes down. And so there is a possibility that you lose all of your money when you buy a call option because the shares can go down in value. And if the shares are dropping down in value at a rapid pace, your contract value will drop at an even faster pace. Now, here's where it gets very tricky. The closer you are to the expiration date of the contract, remember that the contract has an expiration date. This expiration date is the date that you have to either exercise those shares or sell that contract. If you don't sell it, the contract expires and that money disappears into thin air. You can buy contracts with different expiration dates that are further out into the future, a year into the future. Those contracts are much more expensive than the contracts that expire at the end of the week or at the end of the month. But again, you are also going against time, and the faster that the deadline hits, and if those shares are not increasing in value, then that is impacting the price of the contract at a rapid pace. There is a math to how rapid the value of the contract increases or decreases. These are not just arbitrary numbers. These are determined by specific Greek letters and their definitions pertaining to how it impacts the price of the contract. I never really understood the Greek letters or the velocity. It is a lot of math that's involved, and I honestly never cared to fully understand them. I don't know that many traders depend on understanding the Greek letters and how they impact or create value or decrease value in the contract. If the stock goes up, the contract value goes up. If the stock goes down, the contract value goes down. But this is all worth noting. So you might be asking yourself, why would someone purchase a call option? It sounds very risky or like there's a lot to understand. And that is because you can actually make a lot of money, which is why this is a very common question that I get in my DMs, in all the courses that I teach. Everyone wants to know how to get rich quick in the stock market. And if you are a talented call option trader, you can make a lot of money with a little bit of an investment. So while some people don't have money to purchase 100 shares of Netflix, which right now it's trading at $688. They do have money to purchase a contract with 100 shares. Again, the contract prices are much, much cheaper than purchasing the actual shares themselves. And so because of the velocity of the market, if the shares go up rapidly, then you will see the benefits of the contracts. And options traders buy multiple contracts, hundreds of thousands of dollars worth of contracts. Or if you're just starting out, one contract to trade and begin the actual process itself. This was a very high-level overview just to simply understand options trading. I am not a professional in options trading. I trade options here and there when I know that there's a strong catalyst and I have extra cash sitting around. And by catalyst, I mean if I know that the earnings is going to perform well, then maybe I'll buy an option because I know the value of the stock is going to go up. Now, as I mentioned before, traders don't care about the fundamentals. So it's not that they necessarily care about the earnings call and the details in the earnings call, but if they know that the earnings call can be a catalyst for growth, then that is what they are looking for. They are looking for catalysts that can potentially push the stock up. One thing I didn't mention is puts, which is the opposite of call options. This is a contract stating that you believe the shares will go down and you make money off of the puts. That requires a whole other way to look at the market because you're anticipating stock going up. And it's in our nature to want to see things grow and increase to the upside versus betting money that they're going to go down for the downside. It sounds a lot easier, but it gets more complicated when you're actually in the space. Now, I mentioned earlier that I definitely want to provide some resources if this is an area that you want to explore because it can be very lucrative. And I think that we should all have the proper resources to explore all of these spaces. And just because I'm not a full-time professional trader, that doesn't mean you can't be a full-time professional trader and that you can't be extraordinary at it. A couple of the resources that I want to provide you with today is a book called Understanding Options. I have the second edition. I want to make you aware that there's a first edition. You might want to check if he has a more recent edition. The author's name is Michael Sincere. I really enjoyed reading this book. It was easy for me to process and understand such a complex topic. And then the other resource I want to share with you is Masi Trades. That's M-A-S-I Trades, Trades. She is an extraordinary options trader. She mostly scalps. I did take her course. This isn't sponsored by her. She doesn't know that I'm even doing this episode, but she did an incredible course that I took, and it really helped me understand one of the most important things, which was I am not an options day trader, but at least I really grasped the concept of what are options. She's phenomenal. She makes a ton of money, and it's easy to look at her and think, I can easily do this. I love that she's very transparent with her journey and explains how much she lost in the beginning of her journey. If I remember correctly, I think she lost something like $20,000 before she actually was able to sustain herself as a day trader. So just to reiterate that this is a big investment, it is time consuming, and this is a full-time career. So definitely check out Masi Trades on Instagram. She also has a YouTube channel. You want to make sure that you are following the Masi Trades that has 100,000 followers. She is not verified, and there are a ton of scammers impersonating her. So be careful that you are not looking at scammers and you're actually looking at mossy trades. I follow her, so you'll be able to see that my personal account, Luz Warrior, follows her. That is a good indication that you're looking at the proper account. I hope you enjoyed today's episode and that it was informative. Please let us know if you have any other questions on any other topics that you would like for me to discuss. You can send us an email or send us a direct message on Instagram. And yeah. Thank you so much for listening to today's episode. I'm your host, Linda Garcia. You're listening to Investies, a Cosmic Standard and In Luz We Trust production. A special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.